On today's video, I'm going to give you like a secret hack or a tip that is going to allow you to become a better investor. As it relates to Visa, they had incredibly strong international transaction revenue, and this was all predictable. You could have known this was coming. You also know that for the rest of the year, this is probably going to remain strong for Visa. You can apply this to MasterCard as well. We're going to use this and connect the dots from a different company that Visa relies on for this international revenue. We'll show you how you can connect the dots here. We're going to do it all in context of the company's Q1 numbers. I'll get to the tip here in a moment, but we're also going to be talking about Q1 numbers. We'll take a look at the revenue. We'll take a look at the expectations, the upcoming quarters as well. We'll go through all of the financials. We'll take a look at the balance sheet. We'll take a look at cash flows, everything with Visa. We're also breaking out technically. This is exciting when you get these breakouts. You'll have a back test and a move higher. We'll talk about that. What is going on, investors? Hope the guys are doing well out there. We're picking up the story of Visa. Over the last year, shares are up 23%, year to date up 8%. And after announcing those Q1 numbers, shares are up another 1% in the after hours. But what is interesting about Visa is they announced or reported these international transaction revenue. This is essentially international travel, people traveling from one country to another, primarily here in the United States over into Europe. And you had a 14% year over year change to $3.4 billion. I tell you what, that is right close to their data center processing revenue and their service revenue as well. So this is a big driver of profits for the company. It's a big amount of revenue, but it's also big on the profit side as well. So it's very important that that international transaction revenue continues to move higher. We saw this during the pandemic. This obviously collapsed for Visa while the rest of their business flourished. And now this is coming back, the international transaction revenue. And there's one way to not only know that this quarter was going to be good, but it actually is going to continue probably for the rest of the year. And that is because several weeks ago, Delta Airlines reported earnings. And this is a great tip for you out there. There's some of you that you're like, I'll never invest in an airlines. Well, ignoring the airlines would have not allowed you to telegraph what's going on over at Visa. And so the wider universe of stock that you can look into, even if you have no interest in investing in it, actually makes you a better investor for the stocks that you want to invest in. In this case, Delta Airlines saw a massive rise in their premium seating. These are first class seats, and it's basically baby boomers. Okay, they're retired, they've got money, they've got all this equity in their home, they've paid it off, and they feel rich, right? And they deserve it. They deserve to live life and go on vacation. You also have the euro at $1.02, at least when this was recorded. And so you have a lower exchange rate, and you can go to Europe and have probably a meal that might even be cheaper than New York. And what they said on the Delta Airlines conference call is that U.S. consumers are very smart, particularly baby boomers that want a vacation. They're figuring these things out pretty quickly, and they're seeing robust demand in the, quote, off-peak, which I would assume is probably right about now. And I'm sure that the peak is going to be even better. So you can imagine if transactional revenue in the international markets for Visa were up 14% year over year to $3.44 billion. Once we get into peak travel season, particularly overseas, as long as those exchange rates stay relatively the same, well, you're probably going to have a dramatic rise in this as well. Total revenue over at Visa came in about $9.5 billion. That was 10%, nearly 11% growth year over year. They beat on both the top and bottom line, which Visa tends to do. Going forward, you got relatively modest estimates for the company growing at right around 10% for the foreseeable future. So that is why those kind of little nuggets of upside, first of all, it gives you confidence in Visa. If you're like, man, I don't know if I want to buy in at this valuation, although when we look at the valuation trading at 30 times forward, it's not as rich as it has been in the past. And these little nuggets from the airlines give you confidence that the wealthy baby boomers of this country are going to go fly cross-border and they're going to swipe that Visa card. And that is how Visa is going to make money in the subsequent quarters. Things look good. $9.5 billion worth of revenue. Again, 10% growth year over year. When we look at the expenses over the company, they did rise from $2.7 billion up to about $3.3 billion, or operating income I mean, this is what's so beautiful about Visa as an investment. $9.5 billion in revenue, $6.23 billion of operating income, flow all the way down to net income, and you're at $5 billion. When you look at something like cash flow, paints the same story. Pull down a net income of $5 billion, operating cash flow in the most recent quarter, $5.4 billion. What's great, even greater about Visa is they don't have to spend their money on a lot of stuff if they don't want to. They basically have a duopoly, if you will, although, with different types of regulation and those types of things coming in the marketplace, they are trying to open up the competition. But I think that both of these companies, MasterCard and Visa, have such a large moat around their business. I don't think competition is going to play a big role. Now, so they don't have to invest a lot in property, plant, and equipment. They're not building anything. Things look good. They made an acquisition in the most recent quarter, looked like just under $1 billion. It was for an AI company that detected and tried to thwart off fraud, which is really Visa's number one kind of job, other than making sure the payments get processed and the money has to go where it is. There's a decent amount of fraud on the network that they are trying to detect. And so AI is probably one of those things. For Visa, it's going to make it easier for them to detect some types of fraud, but my guess is AI will make it easier to fraud the system in some way. So it's just Visa trying to stay one step ahead. So they did spend some money in the most recent quarter on an acquisition, but what's great about this stock is it's just a cash flow generating machine. They're repurchasing common stock. They're paying dividends. They don't have anything else to spend this money on other than a kind of a bolt-on acquisition. It's just a beautiful, beautiful business. And then from a balance sheet perspective, things are like what you'd think with a business like this. They got plenty of cash. They did whittle down the debt a little bit in the most recent quarter. So things look particularly good over at Visa. Also looking particularly good is the stock chart. Now, we're in these channels. When we get to the top of these channels, not always rather exciting, but you have these breakout moves. And what happens oftentimes on these breakout moves is a back test of the top of the trend. That could be your first area with Visa if you want to quote unquote buy the dip. I know it looks high. This is not an area where we're overly excited, but that's your first area at 340 or about 335. Second areas are if you slip back into the channel, it's usually the middle of the channel. So with Visa, it'd be back down here in the shorter term in the 320s or so. You continue to hold Visa. I continue to hold Visa. It's one of my larger holdings. Continue to hold it. Those dividends, while they're not large, they continue to grow and they roll over. So if you hold this one for a long period of time, the display yield on the current shares is 0.7. But if you do the math, if you've held this stock for 10 years or so, your yield is considerably higher than that because they continue to grow that dividend. They're also buying back the shares. And like I said, you have this tailwind of these baby boomers that have their homes paid off. They might even have 2 or 3 homes paid off. The exchange rate is low. They're living their life last 10, 15, 20 years, however long they live. They want to travel to Europe and do those types of things. And they are buying first-class seats and they are swiping their Visa card when they do it. Hopefully you guys enjoyed today's video. Back in with more. Good luck with your investments.